day. Clement, I see you. You're connecting from Nairobi. So thank you very much, everyone, and good morning from wherever you're connecting us from. My name is Jimmy Chakacha. I work for the International Finance Corporation as an IFC SME banking consultant. I support this project with CoBank and other projects on SME and banking on women. It's really my honor again to be your moderator for this session. I'll be supporting Esther to ensure that we all have a very good session. As you will notice, all your videos have been turned off and microphone also turned off, just to ensure that we have a smooth flow of this training today. We have a very good training lined up for you. We will have polls. We are going to have chat discussion. We'll be communicating throughout the chat all through. So be sure to post in your comments, your questions, and everything there. For those who have questions, post them in the Q&A, and our colleagues online will be able to sample them and answer them as we go through. So without much ado, I'd like to hand it over to Peter from the CoBank side to make introductory remarks. And then Peter will hand it over to Esther, and then we shall proceed with our session. Otherwise, thank you so very much. Grab your pen and paper, and we are on for a very good journey as we grow, learn, and connect together. Over to you, Peter.
Thank you. Thank you so much, Jimmy. Hope you can hear me. All right. Yeah, so we are glad that we have met another time to have a very good training today. But before we start, I want us to pray. Agnes Gary can start with a word of prayer. Agnes, can you hear us?
Good morning, everybody. My name is Agnes Ngari. I sit at Business Banking, supporting business clients. Let us pray. Father, in the mighty name of Jesus, we before you this morning with thanksgiving in our hearts for the gift of life, gift of good health, and even gift of our businesses, dear Lord. We commit this meeting before you. We commit this day before you, so that whatever you're going to deliberate, oh God, you're going to help us implement. It is in Jesus' name we pray. Amen.
Amen. Thank you so much, Agnes. Agnes is one of us. She's a relationship manager at Business Banking, supporting our customers on matters business growth. So thank you so much, our customers again, and everybody who is in this call. We want to really appreciate all of you for coming and joining. Welcome for this fourth training that is organized by CoBank and IFC. We are glad that we have joined again, and today we'll be talking about profitability. We want to understand how to assess profitability in our businesses, and I think we get deeper when Esther will be training us. So we are glad that we met again, and as a commitment for the bank, we continue to train our customers, ensuring that we give us the skills that we need to grow our businesses, and also to continue supporting you with the MSME solutions or the facilities or the products that we have for your growth in businesses. And so this is an exciting session that we will be giving insights and tips that will be very helpful for our businesses in regards to growth and thriving as we continue to do business. So I think we have already done business records. We have done understanding as financial statements. We have done a topic on using the financial statements, and today you'll be happy to learn more on profitability. We want to welcome the staff members from CoBank who have also joined. We also want to welcome the IFC team who have really supported us, led by Winnie and Jimmy and George at the background. We want to really appreciate you for this support. And of course, the trainers for the day. We are glad because Esther Masharia is a lead trainer in this capacity building program. She's with us and she's ready to give us more insights on this particular topic. We are also joined by Anthony Kinywangeshi, who is head of SME banking and becoming later to give us some information on some of the solutions that are also very key for our businesses. So we are happy that we have joined, and we have joined in good numbers and joined early enough, and we be ready to participate and engage and ask the questions and the comments that we have, and we'll be ready to respond to you as we continue. So without further ado, I want to invite Esther Macharia to take over and proceed with the presentation. Over to you, Esther. Yes, Esther, we can see you. Yes, proceed. Good morning.
Good morning. It's great to have you this morning. My name is Esther Macharia, as you have been informed, and it is just great to be here. And thank you, Peter, for that introduction, and Jimmy for starting us off. I have been working with the micro, small, and medium enterprises for over 20 years in the banking sector. And this morning, I am so glad to be with you to go through this topic on profitability. This is our fourth session. We have had 3 other sessions on business records. Then we went on to understanding financial statement and also how to use financial statement. And last week, for those whom we were with, we looked at profitability on a small scale level. And today we want to expound on this very important topic. And we are offering you this training in profitability because we know that you want to build a profitable business in the long haul. And you need to assess the profitability of your business and manage it efficiently. So this course is going to equip you with skills to help you not only run your business efficiently, but also plan for and sustain business growth in future. And to start us off, let us envision business success in the next 2 years. So this is what we are going to do. Just take some time, close your eyes, and dream about how your successful business looks like in 2 years from now. Just close your eyes. Close your eyes for 2 minutes and vision your business, that successful business of yours in 2 years. It will be silent so that you're able to really dream and see how our business will look like in 2 years. See your business in 2 years, how will it look like? Once you have seen that vision, draw that dream. And if you're not able to draw the dream, write it down. Write how your successful business will look like in 2 years. Okay. Now that you're seeing that successful business, share with us on the chat what you saw in your dream. What did you see in your dream? How will your business look like in 2 years? Share with us on chat the successful business in 2 years. How will it look like?
Okay, so Esther Mary is saying in the vision, she saw many customers. Grace saw a complete new brand.
Mm-hmm.
Okay. Another says the will to grow multi-businesses, a growth of customer base.
Wow.
Okay. So thank you very much for that. A big company with the latest machine. Let me take one last one here.
Yes.
Increase in sales. So over to you, Esther.
Already you can see the kind of dream you have. of your business in 2 years. And having a picture of business success makes it easier to take targeted actions to make the dream come true. Many business owners fail because they don't see a clear picture of business success. And I know even as we were closing our eyes, there are some who do not see a clear picture. It's necessary for you to have that clear picture so that you are able to work towards it. And I can say what you are seeing, these are great dreams that you have. And this course will help you to run your business in a manner that it will help you to achieve the future dreams and aspirations. All those dreams that you saw and others that you're going to see in future or you have seen in the past, that is what we are here for today. You will not be able to achieve your dreams without understanding and applying the concepts of profitability. So as we go through, the following are the benefits for this course. You're going to help you. This course will help you to assess your business profitability. You'll be able to differentiate between profit and profitability. Many SME business owners make profits, but they are not sure whether their businesses are profitable. They also teach you smart pricing strategies. We're also going to teach you smart pricing strategies to help you review your current pricing strategy. Also, we are going to enhance, the course will help you to enhance your business growth. And this is because many business owners, they have grand plans and aspirations for their businesses, but often they don't know what they need to do to implement the blueprints as they grow their businesses. So this course helps you to run your business in a way that helps you to achieve your long-term dreams, because profitability is a measure of long-term business success. And in this course also, you'll be able to gauge your business efficiency. It will help you to gauge your business efficiency. So many businesses are run by owner managers. You are the owner and you are the manager. You make all the decisions in regard to your business, and this course guides your decision making by teaching you to assess and improve your ability to run your business more efficiently. We teach you to assess the profitability of different products, the different services, branches, and even departments within your business to help you maximize your profitability. The course will also help you to identify problematic areas in your business. It is designed to open your eyes to identify the problem areas in your business needing cost containment, both in production and operations. Your ability to manage costs without compromising the quality of your products and services is a step towards greater profitability. So as we look at all this, now let us look at our learning objectives. Which objectives are we seeking to achieve? This course will be able to explain profitability. We also measure profitability and also plan for business improvement. And to do this, this is the way our agenda looks like. We are going to have the introduction, which we are just about to conclude after we do the ground rules. Then we are going to explain what profitability is, defining very well profit and profitability, and then differentiating between the two. Then in the next lesson, we are going to go on measuring the profitability. We will explain the importance of measuring profitability, and then we are going to calculate profit margins using the profit and loss statement of our company, the XYZ company. So for each profit margin, you're going to learn how to interpret it and the implications to your business. Then in the last lesson, we are going to on how to improve profitability, we are going to share practical strategies that are going to help you to improve the business profitability. And after all that, we are going to conclude our course. Before we close out on the introduction, let us agree on some ground rules. We ask for your participation. The more you participate, the more you learn in this course. We are going to participate through chat. If you have an idea or questions that come through, please go to your chat box, and that is where we are going to communicate. And also, if you have any question, go to the question and answer tab, and you put your question there. We will answer the questions as we go along. We are quite a number of us from Cooperative Bank, from IFC, and we'll be able to answer those questions. Then the next thing, let's respect each other. We respect all views and opinions expressed in this course. The other thing, in terms of the microphone, we have muted your microphones so that you're able to hear me quite clearly. And also, we avoid any background noise or interruptions. That is why the microphones are muted. So our way of communication is through chat and also through the Q&A. And now that we have agreed on the ground rules, let us begin our learning with the next agenda item. And here we are in explaining profitability. This is the point at which we are going to define profit. We define profitability, and then we differentiate between profit and profitability. So, in explaining the profitability, I want us to go back to the course that we had on business records. For those who are with us from the first course, we were very happy that the company in our case study was making a profit. And we said that in this course, we are going to learn how to assess the profitability of a business. So before we define and explain profitability, we are going to remind ourselves about profit. We'll recall and go through the definition of profit so that we can really understand what it is. We recap on this. So when you're talking about profit, it is the money earned by a business when its total revenue exceeds its total expenses. And I want us to go and look at Mary's Farming Ventures. We have an example on Mary's Farming Ventures, and we'll calculate profit from there. So this is our farming venture. This is Mary's Farming Ventures. Mary usually do fish farming, poultry farming, and horticulture. I would like us to calculate the profit. If you remember from our last course, calculation of profit, it's revenue minus expenses. Let's take 2 minutes to calculate the profit of these 3 farming ventures and give our answers on chat. Let's calculate the profit, revenue minus expenses, so that we can get the profit.
So there's one response here.
Yeah.
Sadiq says 260K. I guess that's the addition for all the 3. And then Robert says fish is 40, poultry is 80, and horticulture is 140. So is Josephat, thank you for that. So over to you, Esther.
Okay, so here we are. We have 40,000 for fish farming. We have 80,000 for poultry, and we have 140 for horticulture. So we can say Mary is doing well because she's making a profit in all the businesses, okay? We can say that she's making a profit. Now, if we are to look at all this, we say that Mary is really doing very well. if you are to be asked, which is the most profitable business in this case? Now, to do that, I want us to take a closer look at the word profitability as we go along. So when you're looking at profitability, we have been able to see Mary's profit. When you're looking at profitability, it's made up of two words. It's profit plus ability. It is your capability to generate profits from your business operations. Profitability, it is the ability of the business to make and sustain profits over a period of time. It's profit and ability. So let us now go to a more formal definition of profitability. It is the ability of the business to utilize its resources in a way that can generate more revenue than what it must pay in expenses. And I will explain some words. When we talk of ability, profitability brings into focus the ability of a business. This course enhances on capability to run a profitable business. When we are talking of utilizing resources, it is the ability of a business to maximize the use of its resources to make a profit. How do you use what you have to make a profit? And now with that, let us help Mary assess the profitability of her different farming activities. So here we are. And I want us to go to the poll that Jimmy will share with us. Which is the most profitable farming venture for Mary? There is a poll. Which is the most profitable farming venture? Is it fish farming, poultry farming, or horticultural farming?
Thanks, Esther. So the poll is up.
Yeah.
And we are 30 seconds away.
Responses are coming in, yeah.
Okay. Okay, and we are 10 seconds away now. I'll bring this one to a close and then share and see how we fared on this one.
Yeah.
So let me end the poll. Which is the most profitable venture? 20% of us are saying fish farming. 16% of us are saying poultry farming. And then lastly, 64%, which is the majority, are saying horticulture farming. So there you have it.
Thank you. Thank you for those responses. So we see the kind of answers that are coming through, that from Mary's farming ventures, that the most profitable is horticulture. Okay. Actually, we'll be able to see horticulture farming, it has the highest revenue and profit. That is what is the answer that most of us have given. The actual answer is none. None of them. Because profitability is not identified by selecting the business venture with the most profit. Profitability must be calculated. Hence, at this point, we do not know which is the most profitable farming venture because we have not calculated. It is until we calculate profitability that we'll be able to know which is the most profitable farming venture. There is an adage that says, what you cannot measure, you cannot manage. One of the ways to measure profitability is by calculating profit margins. And you recall the definition of profit margin from the topic that we had on using financial statements. And we are going to recap on that. We said that profit margin, it is the percentage profit the business makes from each shilling of sale. And now we'll look at the formula so that we're able to go ahead and calculate Mary's profit margin. The formula for calculating profit margin, it's profit, we divide by the sales, then we multiply by 100. And what we realize is that costs and profit have an inverse relationship. The more costs you have, the less profits you have. The less costs you have, the more profits you have. So the more you reduce the business costs, the more profit you make. Every shilling saved from cost-cutting strategies increases your profit margin. So you should note that you should be careful that in your quest to cut the costs, you do not compromise the quality of your products and services. And we said this even last time, because quality of your products and services is important. So now, based on your knowledge and experience on profit margin, that is calculating the profit margin for Mary's Ventures. Now we can go ahead. We have the profit margin for Mary's Ventures. So we are going to go ahead and calculate that. The profit margins for Mary's Ventures. And then after that, we get to know which is the most profitable and why. Okay. So, which is the most profitable now? We have the profits with us, and now we want to calculate the profit margin, which is profit divided by the sales times 100. Which is the most profitable venture? Let's get the margins and then tell us which is the most profitable venture. We'll give you 2 minutes to calculate that. Let me give you the formula there. And Jim will share with us the answers as they come through after a few seconds.
Okay, Esther. So there's one here says, Robert says, all are 40%. That is as far as profit margin is concerned. So none is profitable. That's Robert. Thank you for your feedback. Okay, let's hear the others. Hassan says all are 40%. Kamau says none is profitable than the other. And let me take one last one here from Tanu. He says all the same, 40% in terms of profitability. So over to you, Esther.
Okay, and I totally agree with you. The profit margin is 40% for each one of them. And you remember the answers we had given before we got to the level of really saying which is the most profitable, and we had said horticulture. So since profit margin is the same for all the farming ventures, none is more profitable than the other. Out of every shilling in sales, all the farming activities, they are retaining the same amount of profit. And this dispels the notion that the farming venture with the most sales or profits is the most profitable. Because what we see, for every 1 shilling sold, we are getting a profit of 40 cents, or what we call 40%. So now we can go to the area and we just look at now, we just revise the figures a little bit. We revise the figure and then we can see more clearly the notion of profitability. So let us revise a little bit. Here we are. Let's say Mary, these are her numbers in the fish, poultry, and agriculture. Let's calculate the profit margin and then tell us which is the most profitable. Let's calculate the profit margin. We calculate the profit margin, which is profit divided by sales times 100, and then tell us which is the most profitable.
Okay, so we have 40% for fish farming.
Yes,
that is from Joshua and Wanjiru. Thank you for that. Magoma says 40, 30, and 20%, with fish being the most profitable, and then poultry and horticulture respectively. Thank you, Magoma, for that. Sadiq says horticulture is at 20% and fish is at 40%. So over to you, Esther.
Thank you. Thank you for those answers and for participating. So what we realize is that these are our profit margins. Fish farming is giving us 40%, poultry gives us 30%, and horticulture gives us 20%. And how do we interpret this? Fish farming is the most profitable, although the revenue and profit numbers are the lowest. Horticulture farming, the profit margin is 20, or 20 shilling in every 100 shillings you sell. So this means that the costs are 80%. That is 80 shillings for every 100 shillings. And if you compare this with the fish, what is there is that the cost is only 60 shillings for every 100 shillings. So you can see where now profitability is coming in. If you invest 100 shillings in fish, you will incur a cost of 60 shillings. If you get a revenue of 100 shillings in fish, you'd have invested 60 shillings in the fish. And if you invest 100 shillings you get 100 shillings from horticulture, you will have invested 80 shillings. So you are left with 20 shillings in agriculture and 40 shillings in fish. As a result, fish farming is the most profitable. Now, imagine a market with two business, and this is where you get the most profitable there. So imagine a market with two business people. And these people are including the business owners. They tend to think that the seller where most customers flock to buy is the most successful business. And the one with less customer is not very successful. Actually, the one with less customer may be more profitable. So our learning on profit margin tells you that sales volumes or revenues do not necessarily make a more profitable business. Rather, your ability to retain more profit per shilling of sales is what makes it a more profitable business. Horticultural farming appears to be more profitable, but the profit margin indicates that it is the least profitable. It makes the most sales, but spends the most money. Fish farming spends less, that is 60,000, but is the most profitable if you compare with the 280,000 that is spent by horticulture. So with this, we're going to conclude this session by differentiating between profit and profitability. And to look at this. When you are looking at profit, it is a short-term indicator of business success, while profitability is a long-term predictor of business success. Then profit is an absolute value, while profitability is a comparative value. We put it either in terms of a percentage or a ratio, like what we say 40% for the fish. But when we look at the profit, it's 40,000 for the fish. Profit is a surplus, whereas Profitability, it's a measure of efficiency. And with that, we go to our next agenda on the measure of profitability. Okay. And in this session, we'll start by discussing the importance of measuring profitability. We then use the financial statements of XYZ to calculate the profit margin and what each profit margin tells us about the business, because it has a meaning. So the question that you may be having is, why measure profitability? And we are going to share our thoughts on this. Let's share our thoughts. How does calculating profit margins help you? Now that we have seen how to calculate, how does it help you? How does calculating profit margins help you? Let's share on chat. We take 2 minutes, we share on chat.
Yeah, so there's one. Simon says for business sustainability. Ntabo is saying to know the position of the business as far as profit margin is concerned. Lydia says it helps in pricing. Thank you very much for that. I see a few people are having a problem with the connection. Maybe you would want to just log off and log in right back on. Should be okay. Okay, let me pick 2 other comments. It determines the business prospects. Digna says it helps to know whether the business is growing or being stagnant. Wow, thank you very much for all your feedback. Okay,
Thank you,
profitability
Jimmy.
gives us the future concern of the business. All right, so over to you, Esther.
Thank you, Jimmy, for leading us through that. And thank you for those responses. And those are great points to have. And we are going to add a few more. We are going to add a few more ideas. In terms of measuring profitability, the importance is you are able to assess your business efficiency. Calculating profit margins helps you to assess the ability of business to control costs. Okay, and as a result, it also helps you to identify the cost control areas. Calculating profit margins helps you to identify the specific areas of your business needing cost control. For example, is it production costs that need to be controlled? Do we need to control the overhead cost or the non-operating expenses? Also, profitability will help you to increase the business growth over time. Calculating and tracking your profit margins will help you to ensure that your business grows, the profits, which increase the value of your business over time. As the profits grow, also your value in the business also grows. It will also help you to evaluate your products and business units. When you calculate the profit margin, you know which specific products, departments, shops, or branches are more profitable. And that helps you to know where to pay your attention to. Or in fact, if you get to the situation where you need to probably drop some products, then you know which product to drop and which one to move on with. So from there, you recall that in the case of Mary's farming business, we were able to identify fish farming as the most profitable. So if Mary was to decide to continue with one line of business, the most advisable one would be continue with the fish farming. Because for every shilling you invest, you get more profitability from that business. You are also helped to discover a problem in your pricing. Low profit margins may be indicative of a problem in the pricing if the business is struggling to cover the direct costs. Also, it is very insightful for you once you look at the profitability, once you calculate the profit margin, you are able to relook at your pricing model. Am I using the correct pricing model? And if you recall from our course on financial statement, that the following structure of profit and loss account, the one that we looked at, we are able to look at different profits. Okay, so if you look at it, this is what we looked at when you're looking at the profit and loss statement. There are usually 3 sections, and they give you insights as the business owner on the performance of your business in terms of production efficiency, cost control, and investor returns. We are going to revisit the profit and loss statements of XYZ, which we use to calculate the margins. And we are going to look at all these areas. When you look at gross profit, it gives us the gross profit margin will give us production efficiency. Operating profit margin will give us cost control areas. And then net profit margin will be able to give us the investor return. And we'll see this. So as we go to the XYZ statement, this profit and loss of XYZ that we have been using all through, you recall that the profit and loss statement, it measures the operating performance or the trading performance of the business over a period of time, probably 1 year. And we can see the 3 profits over there: the gross profit, the operating profit, and the net profit. They are all highlighted over here in bold. So we are going to calculate the gross profit margin first, and then we'll see how to interpret it. So here we are, we have the gross profit margin. And for XYZ, the gross profit is 475. We have sales of 720,000. Let us calculate the gross profit margin of XYZ. Okay. If you look at it, we can see the way we calculated the gross profit. We shall take sales, we minus the direct cost. Then we go to the gross profit margin. We multiply the gross profit times 100. And I know some of us must already be calculating that. What is the gross profit margin of XYZ? Jimmy will do this one in about 30 seconds. Let's write the gross profit margin.
So we have a 65.97. Tabo says 66. Okay, so I think the answer is 66 here. We have a valid answers on 65.97, another one 66%. Okay, thank you, Wycliffe. Over to you, Esther.
That is very good. Our gross profit margin is 66 or 65.97. So the gross profit margin tells you that on every shilling of a sale, the percentage portion of gross profit is 66%. And from your opinion, is this good or bad? If you're making a gross profit margin of 66%, is it good or bad? Is this good or bad?
Majority of us are saying it's good. Okay, that's Mary, Leonard, Patrick. Thank you very much for your comments there. Very good. It is excellent. Okay, over to you, Esther, as you can hear.
Thank you. And I also concur with you. It is good. Now, if the ratio is too low, there is a risk that the business may be unable to meet its indirect and non-operating costs. And that could be indicative of a pricing problem. Once you see your gross profit margin is too low, there is a probability of a pricing problem. And you not be able to meet your operating and non-operating costs. Now, let us find out the ability of the XYZ company to control its overhead costs. And to do this, we look at the operating profit margin. And this is the profit. This is a percentage portion of profit that a business makes on every shilling sold after deducting all the operating costs. So what we do, we look at operating expenses as the direct costs plus the indirect costs. And direct cost, mostly we are looking at production or the operating expenses. Indirect cost, we are looking at overheads like your electricity bills, the rent, and all that. Operating profit, we usually calculate it by getting the gross profit, you minus the overheads. That is before the deduction of interest and taxes. Then we are able to get our operating profit. Then to get the operating profit margin, we usually get the operating profit, we divide by the sales, we multiply by 100. And now for our XYZ company, we have an operating profit of 284,500 and sales of 720,000. We multiply that by 100%. Now, what is the operating profit margin? Let's take 1 minute to calculate the operating profit margin of XYZ company. We now have about 45 seconds. Jimmy, you can give us the answers as they roll in.
Yeah. So we have 39.51. There's another one saying 39.44. Okay. One in here says 40%, that's Wycliffe. Yeah, so we have valid answers for 39.5, 39.4, and a 40%. So over to you, Esther.
Yeah, so let's round it off to 40%. And if this was your business, is this good or bad? Would you consider it good or bad? Would you be happy with an operating profit margin of 40%? Okay, do we have some answers on chat? Operating profit of 40%, you have deducted all your company direct, that is indirect expenses, the overheads. Jimmy, do we have some answers? I can see answers coming in, others saying it's good, others bad, a bit low, it's fair. Okay, it's low, it's fair, not too bad, not very good. I retract, tax in Kenya is around 35%. Thank you for those responses. And you can see what it is, 40%. We have not deducted our tax and interest. So mostly we can say 40% for an operating profit, not bad, that is good. What you realize is a higher operating profit margin indicates that the business is earning enough money from business operations to pay all the associated costs involved in maintaining the business. Then low operating profit margin is very risky because there is a risk that the business will not be able to pay its debts or the taxes. And then you find yourself in problems either with the banks or with the taxman. So from there, let us move on and we'll be able to evaluate the ability of XYZ to return a profit to the investors by calculating the net profit margin. And when you're looking at the net profit margin, we are now looking at the percentage portion of profit that a business makes on every shilling sold after deducting all the expenses. And the expenses subtracted, they include the cost of business operations, as well as the depreciation, the interest, and the tax. This is what we get. And net profit, this is what we refer to as the bottom line. And it is the true indicator of a company's profitability. And when you're calculating the net profit margin, this is how we do it. We get the net profit, we divide by the sales, and then we multiply by 100. And for this, if you look at it from our XYZ company, we see that we have a net profit of 33.5%. After calculating it, we have got a 33.5%. And looking at 33.5%, if this is your bottom line, this is your net profit, you have already paid your taxes, you have deducted depreciation and interest. Is this good or bad? From your assessment, if your business is making 33.5% after all your expenses, is this good or bad? Please share. Okay. Jimmy, are you with us?
Thank you very much, Esther. I think I lost my connection at some point.
It is
So
okay.
we have feedback here. Some are saying good, some are saying it's fair. That is Samuel. All right. Jerina says it's fair. Okay.
Mm-hmm.
So over to you, Esther.
Thank you, Jimmy. And thank you it's great to have you back. Thank you for those responses. So what you note, after you have deducted all your expenses, and you're left with 33.5%, you have paid your taxes, you have paid your interest. This is good. It is good because now this is what is left for you as the investor. So if the ratio is too low, the business might not be producing enough to sustain itself. So very low ratios means that the business is not profitable and operating it erodes the owner's capital. That is where you find yourself always going back either to your pocket to put into the business, or if it is not that, your business now starts shrinking because you're not able to operate it fully. So if you look at the 3 profit margin, what do they tell you about your business? You have been able to calculate them. What do they tell you? And this is what they tell you. Each of the margins gives different information about the profitability of a business. Gross profit is a measure of production efficiency. And streamlining business efficiency is important because it will help you to cut down costs and push up the gross profit. This is where you ask yourself, how much am I purchasing? Either raw materials and the goods for sale. Can I do better? Are you efficient in your production? Then when you look at the operating profit margin, it indicates how much profit your business generates from its core operations. And what, like we said, a higher operating margin indicates that the business is earning enough money from business operations to pay all the associated costs involved in maintaining the business. And operating margins, they indicate the management's ability to cut down operating costs. Every shilling saved increases the profit margin. And it also indicates your riskiness, the riskiness of the business. Low operating profit margins is risky because there is a risk that the business may not be able to pay its debts or taxes. So you can be sure when you go to your banker, cooperative bank, they'll really be looking at your operating profit margin to know whether you can pay the debts. So The other area is the net profit margin. This is the area the investors look at because it helps investors to assess if a company's management is generating enough profit from its sales and whether operating costs and overhead costs are being contained. And for a person investing in a business, expecting returns in forms of dividends, this is what you look at. Net profit margin is one of the most important indicators of a company's overall financial health. A high net profit margins means the business is able to effectively control its cost and provide goods or services at a price significantly higher than the costs. And now we can move to the last session where we learn how to improve the profitability of your business. You have been able to calculate, you understand it. How are you going to improve it? And that is what we are going to look at. So the session, it is going to help you to consider ways you can influence the profitability of your business by the decisions that you make. Okay, how do you improve the profitability? And you can improve the profitability in the following ways. I'll go through it, then we'll be able to go through one by one. You can do smart pricing. You can do cost control. You can increase revenues. You increase staff productivity, or you increase efficiency. And we are going to start with smart pricing. How do you do this? So sometimes, as business owners, you complain that the market does not buy from you, and especially in these very low economic times that you're just coming out of and also heading to now the elections. So it's a very good idea to stop and relook at your pricing. And as you do your strategy end of this year, stop and relook at your pricing. It may be that your competition has revised the prices downwards, and you're the only one left selling with the prices very high, so you're not getting enough customers. So look at your pricing. Customers nowadays are more sensitive to prices than ever before because they're also trying to control their costs. So it is important for you to relook at your pricing once again, because pricing can either make or break your business. High prices can block your business vision. Since price-sensitive customers, they'll be forced to explore other options from competition. And nowadays, there are many options. So slightly lowering your prices can help you to push up the volumes. So as you lower your prices, ask yourself, is it going to increase my volumes? And what we can say is, whether you decide to stay at the high price, targeting a certain customer, whatever pricing strategy you use, you must factor in profitability. And you're going to look at 5 facets of pricing models. We'll look at 5 facets of pricing models, and let's go through them. So, like this bright shining diamond with 5 sides, your pricing must be appealing. And now I'd like to know, what do you consider when pricing your goods and services? What do you consider? Share with us on chat. When you're pricing your goods and services, what do you consider? Let's see from chat what you consider.
Okay, so consideration for pricing, we have cost of raw material, cost of labor, the size of the demand. Kevin says quality and demand, okay. And the comments are coming very fast. Let me take 3 last ones. Competition,
yeah.
Competitors' price is another consideration. Potential customers, that's James, thank you very much. Return on investment, and there's so many. So over to you, Esther.
Thank you. Thank you for those responses, learning here quite fast. So the first thing that came out very clearly, you consider the cost. Always set a price that covers all your costs and allows you to make a profit, always. Then consider the influences of demand and supply. When goods are in short supply, you have the opportunity to review your prices upwards. But watch out for price gouging. That is, you revise upwards and then probably you forget to bring them down and your competitors have brought it down. So always keep a tab on that. Then economies of scales also allows you to charge lower prices. Wholesale prices are lower than retail prices, but volumes will help you to be more profitable. So go for wholesale prices. If you're able to get the wholesale prices in terms of the cost, that will be good. Also consider the seasons, like prices of school uniforms and school supplies, for example, books, they tend to shoot up when schools open as we head towards January. Then, although right now, I think it is April now. So umbrella prices also shoot up when it is raining. And you see all them on the streets because you need to get it. Then the next thing to consider is your customer. Your customer. The profile and segment of your customer. You can charge different prices to different customers based on their needs. Corporate customers mostly pay less than individual customers, but they also give you high volumes. Customers wanting deliveries done to them agree to pay a higher price than a walking customer because that customer is looking for convenience. Deliver it to my home, I'll be willing to pay more. Customers, they are willing to pay more for what they perceive as quality, perception. For example, this is especially key in clothes and fashion accessories. Customers are willing to pay higher prices for organic foodstuffs. And you find that customers are also willing to pay more in a more expensive hotel or restaurant because they perceive quality. They perceive quality in those areas. So who is your customer and what is the perception of that customer? Which segment are you serving? The other thing to consider in pricing is the product features. What you notice, smaller denominations of products tend to be more profitable. The economia kadogo, which we cannot ignore for us who are in Kenya and in Africa in general. Customers, they are willing to pay more for what they perceive as a quality product. They look out for certified marks of quality, like the Kenya Bureau of Standards. Also, value addition to your products or services, they help you to charge higher prices. What value are you adding to your product? For example, a person selling yogurt and that's selling plain milk, the yogurt one will be looking for a higher price. So you can just increase your pricing by enhancing your packaging. And you find this even in supermarkets. Packaged eggs, they retail at higher prices as opposed to the plain egg, and yet it is the same eggs. The other area to consider, and you brought it out, is competition. Find out your competitive advantage. And this is because it will give you an edge over your competitors. What do you have above your competitors? For example, is it after-sales service? Or do you have cheaper suppliers, more knowledge, more skills for those who are in consultancy, more proficiency, experience, and all that? This allows you to charge a higher price. The key thing, avoid price wars without considering profitability. You can end up losing. So do not engage in price wars. Differentiate your products and services from competition and this will give you a leeway to charge higher prices. So the issue of competitive advantage is very important. The other thing we need to look at is branding. Customers tend to have brand loyalty, which allows you to charge a higher price. And customers are willing to pay for this because they like the brand. And do not think that branding is only for those big corporate customers. Even for us in SME, we can actually have our brand. So brands with higher prices are commonly perceived to be of higher quality. Look at the way we go to ask for some certain brands when we are buying. So another way of improving your profitability after all this, after pricing, is cutting down your costs. You can cut down your cost, what we call cost control. And if you look at it, what are the things that you do to control costs in your businesses? In the chat box, what are you doing to control costs?
Okay, so let's hear what we have.
Yes, please.
As far as cost controlling is concerned, Demand says minimize wastage. Peter, thank you. You're saying lower expenses as far as cost controlling is concerned. Japheth, you're saying reduce workforce. Okay, again, in Tabo there, minimizing wastage, lower wages, giving promotional items, avoid unnecessaries. Thank you for that, Joshua. Okay, and the comments are coming in. There are many, okay. So let me take one last one. Look for cheaper suppliers. Thank you very much for that. Okay, digitize what is possible. So over to you, Esther.
Thank you. Thank you for those responses, and we can see how we are able to control costs. So one of the ways where you start, you need to list down everything on which your business has spent money on. Start there. Then you group them into logical categories and you analyze each one to determine if they can be reduced. You know, you identify the cost, then after that, you group them. Do I have overhead cost, material cost, staff cost? Then you start looking, how can I reduce them? And be as creative as possible. So for the overhead cost, this refers to the operational cost, and they are not linked to sales. These are the ones which are not linked to sales. These are electricity, rent, marketing costs. So the key thing is to ask yourself, how can I reduce the consumption of electricity? How do I do that? Ask yourself, are my marketing materials effective? Do I really need them, or do I need to change them? Then, am I overpaying the telephone plans? Okay, and then my rent, does it make sense? Then when you go to the material costs, this is dealing with inventory management. And when you're looking at material cost, we are looking at the finished products and the raw materials. And the key thing is to ask yourself, okay, you need to ask yourself, am I carrying too much inventory so I can sell some inventory before replenishing? So you end up not having dead stock. Am I carrying too much? Then could I switch to just-in-time inventory or drop shipping, where I can just receive the materials as I need? Then are my customers paying on time when it comes to the issue of material cost? Then there is the other area, something like the staff cost, or what you're calling the employee expenses. This is where you get the salaries, the wages, the commissions, and the benefits. And you need to ask yourself pertinent questions regarding your staff cost. How many employees do I have on salary? And are they necessary? Am I paying a lot of overtime? And can I reduce employee hours or hire people seasonally? Are you having any idle capacity in your business? These are questions you need to ask in order to prioritize the cost reduction. And yet, another way of improving your profitability, you can increase your revenue. And when you're looking at increasing your revenue, there are things to look at. You need to make it easier for your customers to buy. Online selling, taking telephone orders if your customer cannot come to your business premises. Also, make it easier for your customers to receive their goods. You can do home or office deliveries. Then explore also takeout options if you're in a restaurant and things like that. You can also use pickup locations. They are there in various towns. Then make it easy for the customer to pay. Have multiple payment methods that you do not require cash or in-person transactions. That makes it very difficult for the customers to actually engage with you. So ensure you have got easy ways for the customers to pay you. And I believe Cooperative Bank has provided this. So reorganize your products, your services, and your staff to meet the new demands of customers. So use production equipment to make something crisis related, to make sure you iron out your crisis. Then you can use your staff also to make deliveries. The other thing is structure your agreements with the courier companies. If you have various courier companies, structure the agreements such that they are able to draw. You can offer discounts and promotions on your products. This also works for you in increasing the business sales. So the bottom line here is to get creative and to think of serving your present and future customers before thinking about your profit. Okay? And now we can go and look at staff productivity. When you're looking at staff productivity in terms of ensuring we increase our profitability, the first place to start is to assess employee productivity. Consider the productivity of your staff. If your business has multiple departments, do a job performance review for each of the employees within the respective department. Review the employee assessment and discuss ways to boost productivity. Ask the supervisors, in case you have some, for their input, because they're the ones who are directly connected with the staff. And then build very clear communication channels between you and your supervisors, and also granting them more flexibility with the management of their own team. The other thing, promote employee collaboration. Employees working with each other. It is going to increase efficiency on the product, on the projects that you have, and also the co-workers will be able to cooperate quite a lot. Staying up to date with the latest technology and software that is dedicated to file sharing in the office, communication is also going to help in completing group projects. Then also keep your employees satisfied. This will help to improve the productivity. And to promote employee productivity, it is very essential that that workforce is satisfied. It is very important to you. And one of the key things, offer methods of communication that allows employee to provide input. You are not always telling, let them also be able to give feedback. Boost their morale by the kind of benefits and also the procedures for giving raises and pay increases. How do you do it? What you also need to remember, a happy and healthy employee is a productive employee. So examine the kind of incentives, programs that you have, and also the benefits. So the benefits offered by big companies, see the way you can be able to also bring them into your company, okay? And also look at what competition is doing. As much as possible, set realistic targets for your employee. it is very difficult to micromanage people. So what you need to do, set realistic targets and then set them free to achieve the targets. Let it be flexible, not focusing so much on the 8 to 5, okay? As long as they're able to meet their productivity, then you are good to go. So the flexibility, it helps to keep the employees happy and ultimately increase the efficiency in business. And we have been there 2020. It showed us a lot that people can work from home and deliver, okay? Then do not be afraid to delegate. This seems very obvious, but it is often the most difficult to put into practice. Because you're looking at this business as your baby, you have a direct hand in everything on it, and you don't want to let go. While there is nothing wrong in prioritizing quality, because this is what makes the business successful, checking over every detail yourself rather than delegating is going to waste everybody's valuable time. Instead, what you should do, give responsibilities to qualified employees and trust that they will perform. Actually, that is why you employed them. So let them gain the skills and the leadership experience from you. Ultimately, you're going to benefit and the company you benefit because you hired them for this. Now, after all that, let's look at how you can increase the business efficiency. In increasing the business efficiency, as much as possible, and in fact, I say this is pertinent, set achievable goals. Okay, set achievable goals related to the methods that you use. It will allow you to monitor the changes you make and have an impact on the overall productivity and efficiency. So create goals that span the entire company with smaller goals dedicated to various departments or operations, and track the progress and use this as motivation to continue looking for ways to aid in efficiency. Also, to improve efficiency, use the latest technology. So look for those softwares that are going to increase the productivity and streamline operations in your company. So stay updated in technology. So most of the business, they rely on technology in every task. So ensure that you benefit from advances in enterprise technology by keeping up to date and emerging, the technical threats that are coming up. Any technology that is coming up, see the way you can leverage it in your business. You're going to increase efficiency, and in the process, you reduce costs. The other thing which is very important, map your workflows. This may sound basic and tedious, but it is the single most effective way to increase efficiency in the business. And it is the foundation for evaluating what you and your team are doing from initial client intake or product idea to final completion, from when that customer walks into the door, or from when you start that product to the time the product is delivered to the customer and the customer pays. Mapping the workflows allows the business owner and the team to think through business processes and identify tasks that are duplicative. You'll be able to weed them out. Some actions can be automated, and potential for collaboration across the business will actually come out very naturally when you map that out. So mapping workflows, it is the gateway to developing operations or training manuals that save time. Okay, and they give clarity when you're hiring additional employees because there is something that they can rely on. So create templates for various business functions and also promote consistent communication and quality of service. Then seek expert advice. Businesses you start them with passion. Then when they grow, they become an operation. It is at this stage when they become operations that the owners lose control and the efficiency in the business decreases, because now it's a passion that has grown beyond you. The best business owners understand when to get their hands dirty and when to concede to an expert. And it is at this point you decide, let me get an expert advice, let me get a manager, and I stop being the owner manager. And with that we have looked at how to increase efficiency, we are going to conclude our course for today. And as we conclude, we are going to revisit the objectives. By now that you have gone through this course, you should be able to explain profitability, measure profitability, and plan for business improvements. And now that we have gone through all this, we need to apply what we have learned. Okay? And I would like us to go back and look. Let's just get 2 ideas that you have learned from today that you're going to apply to your business. And as we do that, now that we are through with the course, if you have any questions, put it in the Q&A section and we'll be able to answer it. Which are the 2 ideas you will implement in your business? Let's take 2 minutes reflecting on what we have learned.
Thank you very much, Esther, for that very good presentation. There's so much feedback in the chat box. And as we wait for our CoBank colleagues to take over, let me just jump into the chat box and see any 2 ideas that we are going to implement in our business. So James says, I will implement improvement on efficiency. Lynn says, preparing workflow. Okay. Well articulated, thank you. Okay, I'll measure business efficiency and control cost. Okay, so let me take 2 last ones here. I'm going to set competitive prices. That's Felix. I will process a flowchart. I will seek expert advice. That's Patrick. Thank you for that. And then I'll use technology. I'll set realistic goals. Thank you very much, Judith, for that. And the feedback are still coming in very much, Esther. So I'll hand it over back to you.
Thank you, Jimmy. And thank you for those responses. Now, whatever you have taken as the ideas to enhance your business, what I'll tell you is implement and practice them. They are going to enhance your business profitability and they are going to help you to achieve your long-term goals and dreams. And the dream that you dreamt at the beginning when you were thinking for 2 minutes will actually come to be. And with that, we come to the end of the course and we are going to look at the other courses that we have in subsequent weeks. Okay, so today we have looked at profitability. Next week, we'll be looking at cash flow management, very important for your business. After that, we have 2 weeks to look at working capital management. Then we'll go to loan management. And eventually, after you have paid your loan and you have managed it well, we go to savings and investments, and we are going to take 2 weeks for that. Now with that, would like you to complete a feedback on the course today. And Jimmy is going to take us to the poll. On the feedback, how has the course been for you? And for any questions on chat, we will answer it. So let's fill the training evaluation. If there are areas to improve, also share with us on chat.
Okay, thank you very much, Esther. So the poll is running.
Yes,
we would like
to
hand it over now to our CoBank colleagues to take us through their presentation. And it is our hope that you found this really, really useful. So thank you very much, Esther. I'd like to hand it over to Peter. Over to you. I see you're polling, guys. Thank you very much. So Peter, if you can hear me, over to you and thank you.
Thank you so much, Jimmy. Thank you so much, Esther, for that great presentation. And I think looking at the chat box, participants are very, very happy because you shared very key insights and items that they are able to implement into their businesses. So we'll continue to do this. And just before we wind up, we're going to have Anthony Kinyuangeshi, who is our head of SME banking, to share a few insights around what we've just talked about on profitability and how then does the bank support you with financial solutions to help you increase on your profitability. So Anthony, if you can hear me, you can proceed with your presentation. Thank you.
Thank you so much, Peter and Esther. I hope you can hear me. Jimmy, you can confirm you can see my slide and also you can hear me from that side.
Anthony, I can hear you and I can see the slides. I can see your video.
Thank you, Esther,
All right.
for that insightful session. And for sure, for our customers who have logged on, we'll share the recording, we'll share all these materials with you for your reference, because even for us from a banking perspective, we look at the operating profit, what Esther took us through when you are advancing facilities to you, more so to check whether you're able to pay for your loan and how sustainable will your payments be, or will your business be able to sustain the loan repayments for the loan. So thank you so much, Esther, for that, and also for our customer, again, for finding time to come and join us in this session. The bank continues supporting MSMEs because Cooperative Bank, we operate in a universal model. And one of our strategic objectives is to ensure that then we support the MSMEs out there, noting that we have also come from a very difficult and tough period. And I'll also be unpacking some of the things that we are doing, some of the new partnerships that we have done with the government to ensure that then we are able to rebuild and ensure that then the businesses that we are operating continue to thrive even with the tough economic conditions and the pandemics that have hit the world. So I'll take you through on from the banking side. I'll say that this is our 54th webinar, and we continue bringing in more experts. We continue collaborating, just give you some insight so that you're able to navigate, you're able to know what are the rednecks, what do I need to do, what do I need to change or do differently, how do I increase my revenue. So we'll continue giving you all those soft, I'll call them soft skills, so that we are also able to run our businesses efficiently. Because if your business is doing well, even us as a bank, we're also growing, because whatever we have with our customers is what we call a symbiotic relationship. When you grow, we also grow. And some of the facilities that then we offer from a banking perspective, and especially this time, there are term loans, overdraft. We have also gone very big on mobile loans, and also supporting MSMEs who are also in tender business and all those who are doing supply businesses. We have also gone further to ensure that we also support you if you want to do asset financing or increase on your investments, and we continue supporting you with asset finance solution. We continue supporting you with mortgages to ensure that you also expand. One of our favorite solution is the world has moved on to a digital way of doing business. And one of the things that as a bank then we are doing a big is what you call the e-credit solution, that you're able to do all your transaction within your phone, and you're also able to advance some of these facilities, noting the time constraint that you need the money we're able to do that through your phone. And for this, then we have a very good solution that we have revamped. You can get up to 1 million on your phone with a tenure of 6 months. And that is real time. That is applicable whether you are a sole proprietorship, whether you are in partnership, whether you are a limited company. What you do is we look at your bankings. one of the things that I want to really emphasize, and even from the training, for us from the bank to be able to understand you well, we'll say ensure that all your transactions go through the bank. Because what happens is that when we assess what we do for e-credit, we are able to give you a limit, look at your bankings, pre-score you and give you a limit, and even inform you that you can access a next amount of money at any given time. So what I say is ensure then for us to be able to support you, any transaction that you do, ensure then it goes through your bank. The beauty is for mobile loans, they can still run concurrently with other loans that you have with us, whether short-term, whether long-term, because the essence of the e-credit solution is to ensure that then your business moves on efficiently, and then you're also able to cater for the emergency need. One of the last one I'll also talk about is our partnership with the government. One of the things that also the government is very keen on is the growth of MSMEs. Even as a bank, as a government, one of the topical discussions out there is how do we support MSMEs? And one of the things that then we looked at where we had come from. The COVID-19 is not over yet, but you'll all agree with me, majority of us in various sectors were affected. And what we have done then, we have challenged ourselves to say, if you are a business person out there, if you have a registered business, or you have been given a business permit by the county government, or you hold a license, if you are paying tax with the government and you have your compliance and you're submitting your tax returns, you're able to come to the bank. The main aim here is we are trying to rebuild businesses, especially those ones that have been affected by what has been happening over the last 1 or so year. So the aim of this is to resuscitate our business, rebuild afresh. We are giving it as a working capital. We have a limit of up to 5 million. You can take a minimum limit of 1 million, 1,000 up to 5 million. This is to cater for the segments, whether you are in micro enterprise, whether you are in small enterprise, whether you are in medium enterprise. We give you a working capital to rebuild. And of course, we have also relaxed a bit on our conditions so that then you're able to have accessibility of this fund. We give up to 36 months. And again, what we have also done with the government is we have given our customers a concessional rate, not the normal 13% and above. We're giving this at a preferential rate of 12.5%. And again, what we have said is through our branches, we have made the processes very easy so that within 24 hours, you're able to get your working capital and you're able to run your operations very well. Again, we have also opened it up to say, if you have other facilities with us and you want to rebuild rebuild your business again, you want to ensure that then you, whatever Esther was talking about, you have those cost-cutting measures, you have looked at your business model and you want to increase on your profit. If you have other loans, that doesn't stop us from advancing a facility to you. We'll continue, we'll give you, as it's called a CGS working capital, walk into any branch. As long as you have a license with you, you have your tax compliance, your business is registered, we're willing to accommodate you. And especially now, noting that we are going to our festive seasons, then you stock up early so that by the time then we are coming for the season, the high season, then you are ready to maximize on your profit. Again, we are flexible. Those of us with collateral, feel free more to pledge the collateral with us. If you don't have any collateral, talk to your branch, submit your statements, and you'll be able to give you that facility, whether you have a collateral or not. And then how do you do this for us? And I'll stress this as I finish, and I'll say for us to be able to understand you, from where we sit, because we have all the softwares and we have all your history, we have all your bankings with us. For us to be able to understand you well, we stress more on use the channels that we have. Ensure that all transactions you're doing, you have your phone, you're doing your transactions on phone, you have a name collection with us, you have those POS machines that you're able to support cashless transaction, and they are terminating with us, because we take all that data, we take all the consistent bankings, we take all the sales that you do, and we are able to pre-score you in advance and tell you, Anthony, you can qualify for this amount. We are able to understand you better and even anticipate when you want, whenever we have some of this partnership, then we're able even to reach out to you to visit any of our branches. So those of us, again, who still want to make an extra coin, we have what you call, you can become a core bank agent, and we'll share commissions that will also help you increase on your operating profit. And so feel free, and again, as I always say, yes, what Esther told us, when you come to the bank, we're very keen to look at how your profitability looks like, how your sustainability look like, and you can only be able to do that. We are able to do that if we are able to understand you better from a banking perspective, and ensuring that all those transactions then go through our bank. So lastly, I think I'll say this, the call to action, or what I'll request all of us is keep engaging our branches. We are well represented in almost all counties, 165 branches. We have a branch manager in every branch, and an average of about 3 to 4 business bankers, or what we call relationship managers. Feel free to walk in and inquire on some of these solutions that we have. Feel free also to ensure that demand from your relationship manager to give you a collection solution and support cashless transactions, so that then we're able to understand you better. And again, feel free, whether on phone or whether you want to walk into any of our branches, discuss your financing need early enough, so that for those of us, just as an example, you're in trade, you will know December is a spending month. Those of us in hospitality, December is a cash cow for us. Engage your relationship manager early enough, so that then you are able to get the financing that you need early, and you're able to stock up very well. Again, we also have an online MSME portal for the bank, where we put all these recording, we put all these materials, we give you other insights, and also give you a snapshot of what is the other upcoming webinars for the rest of the year. So continue visiting, and we'll share this, we'll share each and every material that we have presented today, but they are also available in our MSME online portal. So from the bank, I'll say we are committed to ensure that we also support MSME. We'll continue supporting all of us, because we are also an MSME bank. And I want to thank each and every customer. I want to thank our partners, IFC, for that joint collaboration. And we are doing this to ensure that both of us, we harness this symbiotic relationship. As you grow as our customer, we also grow as your support financial institution. So from the bank, I want to wish us well, and thank you so much for finding time within your busy schedule to just come and get some of the insights from us. And we welcome you to any of our branches or any of our feedback platforms, whether Facebook, whether Twitter, Instagram, our branches, through our relationship manager. We welcome you all. And thank you so much again for the opportunity. I want to take this back to Jimmy. Jimmy, thank you so much. Over to you. Thank you.
Thank you very much, Anthony, for that presentation. It has really actually spoke to some of the questions that were popping up in the Q&A, and I can see Winnie and Peter are actually on it, trying to respond as much as they can. But this was very helpful. So I'd like to thank everyone. I'd like to thank Esther for taking us through the initial session. Thank you very much. Thank you very much, everyone who stayed with us up from the beginning up until now. We are really grateful for taking time out of your very busy schedule to come and join us on this training. I just noted some other comments, which I think Peter is going to take them on offline. I see Wasani Cooperative is a new company and they're looking to bank. So I'm sure, Peter, you'll get in touch. Otherwise, I would like to bring this one to a close. I'd like to say thank you very much, everyone, for your participation, your comments. It has been really a grateful session, and I'm really looking forward to connect with you again next week for cash flow management. Otherwise, thank you very much, and over to you, Peter, for your closing remarks.
Thank you so much, Jimmy. And I want to take this opportunity to really appreciate our customers for the time that we've had. I think we had a very engaging session and very good numbers. Joined over 300 customers have been this webinar session. We really want to appreciate you for your time and the engagement. And we know we'll continue to have more interactions. I know you've requested for the recordings. You'll also be able to share. And for the individual questions and the comments, the feedback that you've given us, I think just as we continue to do, we will engage you offline after this session. So we really want to thank you for participating. I want to also take this opportunity to really appreciate Esther and Anthony for the great trainings and the great insights that you've shared in this session. I think our customers will bear as witness that we've really benefited from those tips, and ours is to request us to implement in our businesses, because our vision is to really see our businesses continue to grow. So we really want to also appreciate you, Jimmy, for great moderation through the session. I think you've kept us engaged and you've really done a very good job. So we're hoping that we'll be meeting in the next session. For the staff also members who joined us in this call, we also want to really appreciate you for being together with us. So asanteni sana, we want to stop at this point, and we want to believe that we'll have another session next week on cash flow management, and we'll get more insights around this. So asanteni sana, and may God bless you and God bless your businesses. Goodbye.
Thank you and goodbye, everyone.